is going to be the GBPUSD. And remember, for those of you who are with us throughout last week, remember we were buying this asset throughout last week, and I did emphasize that we will not be considering selling at all, even if any bearish momentum comes in, as we will consider that momentum as a retracement of that bullish move. And of course, we did enjoy multiple buy entries on this asset, and once again, congratulations to everyone who capitalized on this bullish momentum. So the new week has begun, and the way I'm looking at things right now, it appears market participants are bracing themselves for the highly anticipated US CPI report, which is scheduled to be released tomorrow, Tuesday. And in light of the current market condition, the US dollar appears to have altered its losing streak, while the GBPUSD pair remains on a positive trajectory to push to new highs. So we may, due to this anticipation of the event we are looking at for this week, we are likely to see trading activities remain within a range today, maybe. And on the other hand, the GBPUSD pair remains upbeat as market expect the Federal Reserve to lower interest rates before the Bank of England does. Now, given this recent development, how do we intend to navigate the current market structure using the information we gather from both the fundamentals and the technical aspect of this market? Now, to understand the current market structure, our first point of contact will be the daily time frame, where we will be taking into consideration the nature of price action since the month of June of last year. And if we do that, the first thing I was able to spot on this chart is that key level at the 1.2800 area. As you will see, this level had played a significant role in determining the direction of price action. Now look at what happened here in the month of June. We saw how this area was a strong selling niche. As you will see here, every attempt by buyers to break through was met with strong resistance from the seller. And at some point in the month of July, we finally saw price break out of that structure as buyers gained some traction. Then a month later, we saw price drop back below the 1.2800 area. And in fact, since the month of August of last year, we saw our price had remained subdued below the 1.2800 area to emphasize the strength of the sellers around this area. So you can see that every attempt by buyers to break out was negated at every point in time that price comes into that area. And not until last week's trading session, we finally saw price break out of that level to close at a new high at the 2.9 area for the first time in about 7 months. Now, going into the new week, the question at this juncture is, the breakout we witnessed on Friday, will it turn out to be a true breakout, or is it going to turn out to be a false breakout where selling pressure may persist again, pushing price under the 1.28 area? Now, despite the fact that the market has been bearish since last year, July, which is evident with this bearish trend line you see here after connecting the series of lower highs, something interesting happened in the month of October. As you will see, the bearish momentum did not continue anymore as price consistently found higher lows at that point, giving us an ascending trend line to work with. And of course, this trend line here has supported the bullish trend leading to the breakout of that descending trend line we have here. So we saw the breakout of the descending trend line happen here at the beginning of last week's trading session. Now, from a technical standpoint, when price breaks out of a trend line, especially this descending trend line as we see here, we expect that some point in time price may likely come back to retest the trend line that was broken, which beautifully shares a confluence with that ascending trend line to incite an uptrend continuation. Now, is that going to be the case for this week? Are we going to see price drop into that area to incite another wave of bullish momentum, or will it drop to break down, retest the structure to incite a sell-off here? Or are we going to see a situation where price will just continue the momentum right above the 1.288800 level to incite more uptrend scenario? So to answer this question, I was able to identify a simple trading setup on the 4 hours time frame, which we will be using to manage the market dynamics on the GBP USD. Now, scaling down into the 4 hours time frame, what I did here was to take into consideration the nature of price action since the beginning of the month of February. And if you do that correctly, you will see that the market has been bullish, as you will see our price action transitioned into an ascending channel. So if we connect the series of higher highs here, we have the resistant line of the ascending channel. And when we connect the series of higher lows, we have the support line of the ascending channel. Now, something interesting happened during the course of last week. We saw how price action broke out of that resistant line of the ascending channel, as you will see here, which beautifully lines up with that key level at the 1.2800 area. Now, since the breakout of the structure happened, we've seen selling pressure resume, which could be a result of profit-taking activities, retracing maybe back into the structure in an attempt to continue the uptrend. Or are we going to see a scenario where the support line of the range will be a target for sellers, dovetailing to about 120 pips minimum to catch here, or even more if price drops further to the downside? Now, to guide our trading decisions for today, we need to understand the behavioral patterns of market participants since the new week has begun. And if we scale down into the 1 hour time frame, you will see, hold on a second, you will see that since the new week began, we saw our price action remained confined within the range of the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in the market. And you know what I told you earlier? I said we may expect an extended sideways trading activity due to the anticipation of the US CPI data coming up tomorrow. And we also have some other inflationary data like the PPI data, retail sales data coming up later in the week. And we also have the data from the labor sector in the United Kingdom, all of which will be playing a major role in bringing some impetus into this market. Now, with the situation we have here, we would rely on this technical structure to guide our trading decision, at least for the meantime, while we wait for these events to happen. So you know how we use our ranges whenever we identify them on the chart. We wait patiently for price action to either break out of the resistant line of the range to give us an opportunity to buy and join the uptrend continuation, or the breakdown of the support line of the range to give us an opportunity to sell, maybe joining that profit-taking activity going forward. Now, in as much as price action has triggered my whole sell position right here at the breakdown of the 1.28450 area, we still need to be wary of the uptrend continuation on this chart. Now, the reason why we're still going to keep the options of buying open is simply because of two factors here on this chart. The first one is the fact that price has broken out of the resistant line of that ascending channel we identified on the 4 hours time frame, as you will see here, and we may likely be seeing price action be doing a retracement to retest the structure in an attempt to continue the uptrend move. Or if price action breaks down the ascending trend line, then we may be looking at our key level at the 1.28 area as an area to look out for new buying opportunities if a reversal pattern evolves around that area. So what this simply means is that at this point, this bearish opportunity here is going to be considered a temporary one, as we will try to be on standby to move all stop losses accordingly as soon as price moves significantly in our favor. So for those of us who capitalize on this bearish opportunity, we shall be moving our stop losses accordingly, especially if price gets close to this trend line. Move stop losses, secure the current sell position, and wait patiently to see how the market will react to this ascending trend line. If a double bottom structure happens around that area or any form of reversal pattern occurs, we will be buying breakout of the neckline to join the uptrend move, when we will be adding more buy position at the breakout of the 1.28650 level. But if price drops below this ascending trend line, then we could be looking out for more selling opportunities to add, and then let's see how the market will react to the 1.280 area, where depending on what happens there also will determine if we are going to be joining the uptrend continuation from there or add more sell positions to our existing trade. So to join a sell at the breakdown of this ascending trend line, let's look at somewhere around the 1.28250. I think that will be more precise to join. Hold on a second. Yes, 1.28250. So I would like to label this area. So if a breakdown retest of the structure happens, we'll definitely be adding more sell positions to our existing trade. So let's mark this level out and then look out for more selling opportunity if ever price action breaks down that structure. So this is how we are going to be managing a bearish momentum on these assets. And if the contrary happens here, that is, price does not drop further to the downside and instead continues to find new highs, then a buy stop order above the 1.28650 will trigger a buy position for us if price breaks out of that area, and then we look out for more opportunities to maximize the bullish move at the breakout of the 1.28900 level. So this is my simple view on the GBPUSD for today. So I encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the setup, or you need some further clarifications, feel free to let me know in the comment section.